Hello everyone, this is Kishore. Welcome back to my channel. Today I'd like to go over major market indices analysis, CPI and PPI data analysis, retail sector earning analysis, US dollar and SPY divergence, September institutional portfolio restructuring, September seasonality, triple witching and FOMC. This is not a financial advice, just for knowledge purpose only. Let's jump into the show. CNN fear and greed index, it is in the neutral. We know that last 2 weeks it is in the extreme fear and the fear. Finally, it came back to the neutral sentiment. And this sector performance for the week. Technology is up more than 8%, only energy is down 0.49%. And this is sector performance for the 3 months. Real estate and financial perform really well. Real estate is up by more than 17%, financial is up by more than 9%. Both are interest rate sensitive sectors. And this is sector performance for the year till date. Energy is just up 2%, and this is the one mostly contributed to the inflation to go downside, and utilities up more than 24%. And this is price to earnings ratio on 2024 till now in the top chart. Only energy is up with 13.4%, remaining all sectors are up very good. And earnings per share growth on the 2024 and 2025, energy is down compared to any other, and next year it is having very good guidance, and also the communication services, healthcare and materials. And this is last week economic report. On Wednesday we got the CPI data. Core CPI is came 0.3% more than the 0.2 anticipated. And on Thursday we got PPI data. Again, core PPI came more than the expected. Expected is 0.2% and it came 0.3%. And this is US core inflation month on month history. It is up little bit, but not like a major one. Like previously we saw in 2024 we saw 0.4 also. Now it is 0.3. So there is not big concern on this one. And also the PPI data, it is came more than the expected one, but it's not a major concern level. It's okay compared to the previous history. And this is Baltic Dry Index. Whenever the Baltic Dry Index is up, PPI goes up because this is a sea freight price index. You can clearly see here in August it came from 1700 to the 1900. So this is one of the reason why core PPI went up. And this week we have FOMC meeting. Last week before inflation data, a lot of analysts predicted there is a chance of 50 basis points cut, but after CPI and PPI data and also employment data, now they're anticipating only 25 basis points cut. And one of the main reason for the inflation is up like or more is shelter cost is rising 5.2% annual rate. And housing, like this is like 44.6% of housing is in the CPI component. And this is coming week economic reports. On Tuesday we have US retail sales and retail sales minus autos, and on Wednesday we have housing stats, building permits and also the FOMC meeting. And Thursday we have initial jobless claims, existing home sales. All these are very important for the in this week. And this is retail sector earnings dashboard. On left side you can see the earnings data, and on the right side you can see the revenue data. Out of 199 companies, 196 companies posted their earnings, and in 196 companies 70% of companies posted above the expected revenues, and only 24% companies posted below the expected earnings. And on the revenue side, 49% of companies posted the above the revenue expectations, and 51% of companies posted below the revenue expectation. So this is a little bit concern on the retail sales. The revenue expectations are going down. And retail sales forecast for this third quarter also they're giving the negative forecast, like they are not giving the good forecast for the third quarter. And these surprise factors, leisure products are down a lot compared to any other product on the retail sales. And the down, we can clearly see earnings and revenue guidance for the Q3 2024. 26 companies are giving negative EPS guidance, only 12 companies are giving positive EPS guidance, and 38 companies are giving negative revenue guidance, only 12 companies are giving positive revenue guidance. This is a little bit concern. We saw that last week video I showed unemployment unemployment data is not looking good. So when the unemployment rate goes up or unemployment percentage goes up, that impacts the sales, consumer spending, and that impacts the retail sales. It's very clean and clear. Retail sales or retail's growth anticipation of the Q3 is very bad compared to the Q2. And this is retail and restaurant index earnings growth rate from Q1 to Q4. On Q1 we have 22.6% of earnings, but on 24 Q3 we are anticipating only 0.6%, and on the revenue side only 2.1% is anticipation, which is way below than the second quarter and the first quarter. And this is September market performance election years. On the dotted lines of the previous performance, and thick lines of the current performance. Based on this, last 2 weeks of the September, we're having a lot of volatility. One of the main reasons is institutional portfolio restructuring takes place in the last 2 weeks of the September. And this seasonality for QQQ for last 19 years. This week, the coming week is very, very bearish compared to any other weeks in the year after 19th and 20th weeks in the year. And this is crude oil weekly chart. Last week I posted this one. I said it's a very good support level. So this week it went up a little bit, not a major green side, but at least it's closed green, like 69.545. And also volume is good, but MACD still is going down and RSI is a little bit turned up. So on the local chart support level, it is good position. The candle is good, volume is good. Only momentum need to be turned positive. And also I think the futures, energy futures are also bullish. So looks like it is going to be bounce here. If it bounce here, that impacts the inflation in the next coming months. And this is the average holding period for stocks has shrunk dramatically. The importance of the technical analysis grown a lot in recent years, because the holding period of stocks are went down a lot. In 1960 it's almost like 8.3 years. Now it is like just 0.6 months, like 6 months, less than a year. And despite daily chart, right now it's very, we are very close to the all-time highs. The all-time highs 565.11. Right now it's 562.1. The candles are getting smaller and smaller, and the volume is going down in the upside. So the trend is upside, which is good, but the volume is going down, which is not which is a bearish sign. But the MACD and the RSI is still pointing upside, and we are very close to the all-time high. Based on the option volatility this week, there is a chance of 11-point move on either side. And this is bi-weekly chart. The candle is really good, bullish engulfing candle, and also the volume is good. RSI and MACD are not bad, they are flat. MACD is flat, RSI is turning up. So if it crosses 565, the next resistance I see is 571. If it is a fake breakout, then 571 is the place where it can reject. And this is percentage of stocks in S&P about 20-day moving average. It is right now at 63. I'll always look into the 86 and 15 level. 86 is the where I'll see the selling point, and 15 is, or 14 or 15 is the buying opportunity. And this by daily chart on the dividend day, if you see here on any dividend day, it went red. Market closed red. So we have a dividend day on September 20th of this Friday. Looks like it may follow the same pattern, like closing red. Let's see what it happens. And this is dark pool data for SPY. There is no major dark pool at the 560 level, but there is a very, very big dark pools at the 550 level. This can act as a very good support if it comes down, but if it breaks, then it can go to the 550 level. Right now 555 looks very, very good to me. And this is, and the top chart is US dollar index, and below is the SPY chart. It's a weekly chart. I see some kind of negative divergence between the dollar and the SPY. When the SPY is going down, dollar is going up. That's kind of negative divergence. And at some point of time, dollar will reverse, and then SPY goes up. So right now the dollar index is still going down, and last 2 weeks it is going sideways. You can clearly see those two candles are the inside candles, and the SPY is going up. So still there is a kind of negative divergence here. Once dollar goes up, starting going up, then there is a chance of market can turn down. And this is dollar performs well in September. In 12 months, September is the 1 month where it is dollar performs really, really well. I think September is a very bearish month. So when market is going down, foreign investment comes through dollar. And this DXY dollar index daily chart. Right now it looks like a hammer kind of candle on the daily chart. It's a bullish trend. Basically it's a trend reversal. It looks like a bullish to me, and MACD is going up. Looks like there is a kind of positive momentum is coming up. And this QQQ daily chart, it's made a very good symmetrical triangle with, and also there is a Fibonacci level 0.786 Fibonacci level at 477. It rejected the Fibonacci level, and at the same time it rejected this trend line in the symmetrical triangle. If it goes down here, then there is a high chance it can come back to 460 level. But let's see how it will perform. If it goes above 477, then 485 is the next resistance. And this week 11-point move is possible with the option volatility. And this is QQQ weekly chart. Again, the symmetrical triangle is there. The candle is bullish engulfing candle, very, very good candle for the bulls. But let's see what happens this week. And this is dark pool for the QQQ. There is a very big dark pools at 463 and 468 and 470 levels. that can act as a very good support. But if it breaks here, then there's a high chance it can come back to the 460 levels. And this is the option flow for the QQQ for Monday. I do not see any major the strikes here, but 480 is the only one that's standing very tall. So if it goes up to 480, then 480 can act as the resistance. And this IWM daily chart, so very good candles, and option volatility for this week is 32%, which is like a 7 point move possible. And MACD is curling up, and RSI is going up, and the volume is going up. Compared to SPY and QQQ, IWM is looking really good on the bull side. And this is dark wolf data for the IWM. Lot of dark wolves came on the Friday at 216 and 215 levels. Let's see if it don't break that, then 220 is the next resistance. And IWM options, again, it's very good, positive gets at 216 level. If it crosses, then it can easily go to the 219 level. And this is open interest change for the futures, ES, NQ, and RTY. For the Monday, I do not see any major move or any major levels. Only looks like some kind of sideways is possible. Maybe market is waiting for the FOMC meeting. And this is a high yield bond weekly chart. Lot of weeks it went sideways between 76 and 77. Finally it break upside, it went up above 79. This bond I look for like a liquidity to the market. When it is going up, means the liquidity is coming into the market. So liquidity is still coming into the market, and the volume is up, so which is good for the bulls. And this is another index I look for the liquidity. Bloomberg US Treasury total return unhedged USD. People who know bonds, this they know about this one. And this is like a bond premium coming into the stocks. So it is going up, it's really good one. So but there is a previously there is a support and resistance here. So let's see if it breaks 2.4, then it can go to the 2.5 level. But let's see how it do at the 2.4 level. And the summary is market entering into a high volatile week. This week we have a FOMC meeting and also the triple witching day. Seasonally bearish period, futures are giving bearish signal. September last 2 weeks are institutional portfolio restructuring period, and we saw that seasonally it is very bearish. But and also futures are also giving bearish signals. But the charts are looking very good to me, except the volumes are going down. The SPY and QQQ, IWM is looking very strong. All eyes on FOMC meeting. As anticipated, if FMC in the FMC meeting, if Fed cuts 25 basis point, that's okay. But if they do any surprise with 50 basis point, then we need to see how market reacts. Triple witching day can bring some volatility to market. Fed rate cuts are coming in institutional portfolio restructuring period, which is very interesting. As I said earlier, institutional portfolio restructuring is coming in last 2 weeks of September, and also Fed is also cutting the interest rates. Let's see whether the money is moving from the Q to small cap like IWM or not. So that's all for today. Hope you like this video. If you like this video, please hit the like button. Please watch more videos in my channel. If you like them, please subscribe. Please hit the bell icon so that you'll get notification when I upload a new video. Please share this content if you're a friend looking similar kind of content. Thank you so much. Bye bye.